10-year note yields end the week slightly lower, but maintaining the range. And over the last 5 Fridays, we've settled in a range of about 6 basis points. Today, hovering right around 67 basis points. So again, just below the midpoint of that 60 to 80 basis point range we've seen over the last few months. At this point, treasuries will remain in that range. Don't see any sort of knee-jerk reactions despite what we're seeing in the equities. Saw sell-off in equities. We saw mixed trading in commodities, but the bond market just remains very stoic, and that despite the fact that we had a huge supply week in 3 and 10 30-year issuance. So right now, the market just kind of taking everything one day at a time, not really looking too much down the road, where there's obviously going to be some possible hiccups when we talk about the economic recovery, when we talk about the Fed, when we talk about the elections. A lot of what ifs out there, and the market really just kind of waiting for some kind of confirmation, not really pricing in any major event. So at this point, holding the range, again, settling just below the midpoint of the several month range. Market volatility, well, despite the fact that we do have a lot going on in other markets, the bond market has not seen a whole lot, and as we continue to trade the range, we continue to see volatility decline. And while we are seeing it remain elevated in those back months, which will cover the November elections, we aren't seeing them on those highs. Right now, a little bit of complacency being priced into the bond market. Obviously, rates aren't going anywhere in the short end, but in the back end, we had been seeing some modest fluctuation. Now we're back in the range, not seeing a whole lot priced into volatility. So really kind of a non-event price for the next week or so. And what do we have next week? Well, we do have some data. We'll continue to watch that, obviously retail sales claims, but really it's all about the Fed. Fed meets next week for the September FOMC. Not a whole lot expected here as far as policy. It'll be pretty much standard what we've seen over the last several months since they made all those big changes in March. However, they are talking about the inflation targeting average, and that will be probably incorporated into the statement. So we might see a modified statement, but nothing I think that will change the outlook in the short term. Right now, the Fed's still waiting for some of those third quarter numbers to come rolling in, possibly waiting until fourth quarter before they make any real forecasts as to when they will be lifting rates, because right now the market's not really looking out for several years to when they might actually lift short-term rates, and that only wreaks havoc in the middle tier as well as in the long end, because we're going to continue to see rates at low levels, and we're going to continue to see these narrow trading ranges and low volatility as long as the Fed stays involved. So heading into the weekend, we're just below the midpoint of the multi-month range as we await the Fed's announcement next Wednesday.